Good morning. It's Quant Trade Edge, and I'm pretty much done for the holidays here until Christmas. Markets have kind of slowed down, but I did want to follow up on something we talked about last night, and that is the Forex trade that was setting up in crude. So, this is the daily chart, and this was the candle that we thought was a good candle to short beneath, with the Forex trade method. And it turns out that the 60-minute was the appropriate time frame for that trade. And you can see that immediately, in fact, I think it was in the first 15 minutes, we took out previous day low. And given that it happened so early in the Globex session, there needed to be a lot of time for this ABC to form, and turns out that the hourly is what did it. Here you have clean A up, clean B down, and then this was your C up. And these had the exact same height, so you would use the bigger bar as your trigger. So that was kind of an inside bar, and there's your A, B, C. This height was 40 cents, so $1.60 below gets us to 58, I believe, 72.58. And this is your 4 times your risk. Now, of course, did I do that math right? 74.18 minus $1.60. 72.58, yes, that's correct. You had to be up at 3 a.m. to have caught this. And this is kind of, drives me nuts, but peaks and troughs in crude oil tend to happen between this 2 a.m. European Open and 3:30 for some reason. In this case, we got the exact high right at 3 a.m. And so, of course, I was not awake to actually take advantage of that, but it did play out beautifully. As we came down this morning, I think here we stopped one tick shy of 4x. And to me, that was kind of a good enough area. And then a couple of hours later, we got the GDP news, and that GDP news gave us that little extra spike and left a trap. And I did want to show you what that trap looked like on the 1-minute chart. And this is kind of where just tape reading and price action and all of those things come into play. So, we have 2 pieces of information. One is that this 72.59 is pretty close to our Forex target. Just trying to get a trend line here. But that setup was on a hoagie. This 1-minute hoagie right here with 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 bars inside of it. That happened right at 7:17, and then this is 7:31. So okay, 7:30 was the news. 7:31, you had this breakdown from the hoagie, which was immediately reversed, and there is your sign that the market was going higher. And that would have been probably the earliest place you could have entered. And if you look at that bar, it still hasn't. Oops, where are we now? We're all the way over here, but that bar has been safe. And then there's multiple ways you could have done this. That would have been the quickest, earliest entry if you recognized it. Then there's also, you had an A, B, C up, but really this swing up is greater than the previous swings down. So the U-turn itself was actually triggered right here. Typically you would wait for an ABC, and then when that gets taken out, you say that's where the U-turn is. But here we already had a swing up greater than the previous swing down. Well, I guess if this was all a hoagie, then this would have been the previous, well, that was also a hoagie. Well, okay, so maybe not then. Counting out, the hoagies, that swing started all the way over there. So, because if you remember, we don't count wiggles within a hoagie. So there were a bunch of hoagies here. That's a hoagie. That was a hoagie. So this has been a clear swing down, and then this whole thing here was a hoagie. So overlapping hoagies, that's your swing down. So we do look at this ABC up, and then when this level was taken out over here, that would have been your U-turn. And then this is what I call the gut check. Once you have a U-turn, and I feel like it typically comes back to wherever that mid-swing low is, and then higher from there. And now we are testing above previous day low. So, you know, the 4X on the hourly chart already played out, and then news at 7:30, that GDP news was significant, caused a reversal there, which you saw on how it played out on the 1-minute chart as a broken hoagie. And then the major trend was changed from down to up at that point. Anyway, hope this was fun. Hope you're enjoying yourself, and do take some time to refresh over the holidays. Sometimes for me, January 1, or January 2, when the market's open, has a completely different character than December 31st. So it is sometimes good to just take some days off and clear your mind, so you're not trading December's patterns in January, when the volume picks up and the nature of the markets sometimes have a binary change.